Hey, what's going on, guys? Happy Monday, happy Labor Day to all my fellow U.S. citizens. If you had the day off, and I hope you did, I hope you were able to enjoy it with family and friends, maxing and relaxing in the sun. Hopefully, you had some sun and you were not a part of the recent floods. We're able to enjoy this day off and just take advantage of it. On Friday, I promised I would put out a video on Monday, which is today, and I totally forgot that today was a holiday when I made that announcement. But I have nothing else going on at the moment, and of course, I had the day off today. So, what better day than to make a video about our favorite subject, crypto, specifically Bitcoin. I hope the title of this video is not too traumatic. There is something I would like to discuss on the Bitcoin chart. Actually, I have discussed this many times in the past. It is an important level that we all have to constantly be watching, especially this week, because we're right there. And if we break this level of support, look out below. I think that Bitcoin could drop considerably. And by considerably, I mean at least 20%, filling the gap on a CME futures chart at 20,000, which I've mentioned in several posts. I will show you that in today's video. But we could go lower. I mean, if these supports break, look out below. So we'll talk about that. We'll discuss that today, as well as quickly review our charts that we reference almost every video in these weekly updates. So without further ado, let's just go ahead and jump right into our dollar chart here, and I will show you what we're looking at. All right, so here is our dollar chart, and the dollar is up against resistance once again. All right. It keeps playing with our minds. We don't know whether it's going to break this resistance or whether it's going to come back down. Of course, here I have printed a classic head and shoulders pattern. Let me move this chart over so you can see that. And the right shoulder is still valid. All right. So we continue to make lower highs. See these red dots here, these red circles. These are lower highs. So this right shoulder remains valid, and as long as we don't break, in my opinion, this most recent high, I think this right shoulder is still valid, and we will go back down once again to test this neckline. If you guys remember, this neckline comes all the way from 1984, and we are currently using it as support. It is also the neckline of this very ominous head and shoulders pattern, meaning that once we break that, it is bye-bye US dollar. Okay, next on the list here is our VIX, and if you remember from previous videos and previous posts, I printed this M pattern. I said this looks like what is taking place here, a double top. We hit the 200-day moving average and just continue to descend. All right, and this M pattern, exactly as I drew it, has played out. You can see I have it down here on the RSI chart as well, and we dropped out of that channel. And actually, if I get out my pen here, just so you can see where we're way down in this territory right now. So VIX continues to descend, and I do believe that on Tuesday you'll see that dollar start to drop as well. All right, so what do I always say? When the dollar drops and the VIX drops at the same time, generally what happens in the US markets, at least, is they go up. So let's take a look at the SPY, which is the chart that we have been utilizing to track the US market, the general price action of the US stock markets. And this tracks the S&P, of course. You can see the prediction that I had in place this way to the blow off top. is still occurring. We continue to, yeah, we had a little bit of a drawback. And as I suspected, we would kind of maintain range within this orange part. I've got to extend this orange channel here. But that is exactly what we have done. We bounced off the bottom of this orange channel part here and come back up. I expect we'll probably hit our heads on the top of the orange channel here and come back down. But overall, the price action is going up, up, up. And remember, the U.S. Stock market traders can remain irrational for longer than thought possible. I know everybody keeps talking about a recession coming. All the data that is incoming, everything points to a recession. And that is true. Housing market is collapsing. We're just seeing data points after data point just showing us that, yes, a recession is coming. But before the recession comes, I do believe that we ascend to new highs on the U.S. stock market. And that is why I have this blow off top being projected here. This is primarily based off of Elliott wave. And I believe we are in wave 5 right now, which, as many of I'm not an expert on this. I'm just saying that wave number 5 generally tends to be longer and more extended than makes any sense. All right, so we are going to continue onward and upward, in my view, and break even previous highs on the U.S. stock market. And so as this happens, folks, Bitcoin will or should follow. Now, one issue that we're having recently with Bitcoin is we keep getting FUD in the news. SEC delays ETF. SEC approves ETF. We have BlackRock. We have Grayscale. We have ARK. We have all these big players in the mix. And fortunately for us as crypto traders, the courts are doing justice. I know it's a rare thing to see in the U.S., but SEC was defeated in their case against XRP, Ripple, and recently they've been defeated in the case that Grayscale brought against them regarding their ETF. But it's not official until it's official, and we actually have a Bitcoin ETF on the market. And so before that happens, what happens with Bitcoin? That's what I want to take a look at today. So let's jump into the Bitcoin chart. And this is a chart that you guys are all familiar with. And because I've shown this many, many times, we're right here at neckline support. What is neckline support? Why do I have that line? All right, so that line comes all the way, I believe it comes from way before this date here at the 12th of May, 2022. But for our purposes, this is good enough right now because this is the date where, in view, you guys can see all of this. We touched that, pivoted, and immediately went back up. Then when we broke below it, we broke significantly. Let me grab my arrow here so you guys can see what I'm talking about. All right, so here's our first touch, pivot, U-turn. Went back up here and did all this price action underneath 30,000. Touched our 31,000 level, came back down. We broke our neckline right here. And when we broke significantly. Came back up, touched it again, formed our head, touched it again, formed the right shoulder on this inverse head and shoulders pattern, and we broke up and hit resistance at 30,000, all right? And then came back down, and for months you guys heard me talking about a retest of this neckline. Okay, so we got that in June of this year, and then went back up again and retested our significant levels of resistance. And then, surprising to me, and you guys all know I was surprised by this, we broke below this red channel here. Let me just zoom in a bit so you can see that a little bit better. This channel starts down here. And January and February, January basically, and we touched it again over here in March, touched it again here in June. That was the retest of that neckline. And then surprising to me, we broke this just recently, and that was many analysts, if they're honest, did not expect that break at that point in time. There was no reason, and we're still trying to understand why this occurred. It was mostly liquidation of longs. All right, and where did we come, guys? We came right to this neckline here again. All right, again, this neckline, the price can be anywhere from 25,200 to 25,300. You could actually draw a range there. I've just, for the purposes of this video and explanation, just drawn a horizontal line, and that's highlighted in purple there. So we touched that once with that break below this red channel, touched it again. You can see that's where all the buyers are at, all right, and touched it a third time. So that just shows you how significant this neckline is. And really, that's what I want us to focus on this week and into the future, really. If we break below that, then there is trouble. And I want to show you something, just review again on the CME futures chart. I posted several weeks ago, there's really three gaps here, but the post that I made just recently was just focused on these two gaps, one at 27,485 and one at 20,290. At that time, we did not know which gap would be filled first, though I was leaning towards the upper gap, all right, at 20,485. Okay, that did get filled first. All right, so now the question is, are we going to come down here to this gap at 20,290? Are we going to fill that gap here, or is that gap just not going to get filled? Over 90% of the time, I don't know exactly what the stats is, or are, I should say. Gaps do get filled, and sooner rather than later. But we also have a gap up here, way back here at 35,180. So my view has always been that before the year ends, we will fill that gap at 35,180. Recently, because of price action, I have been a little bit more hesitant on my conviction in that regards. However, and we're going to jump back to the Bitcoin chart here, and I'm going to pull up something a little bit different for us to take a look at as well. So you can see a different view, different trend lines being plotted, patterns being plotted, etc. Give me 1 second as I pull that chart up. All right, so this chart really just focuses in on our line in the sand again. So I've said, again, this line can be anywhere from 25,200 to 25,300. I've got circled here the many touch points. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 times we have touched this thing as either support or resistance. Now over here I have highlighted that it's resistance, and that was mainly because we were under it, right? And this is where we formed our inverse head and shoulders pattern. You can see we've got a lower high here, a lower high here, here's our bottom, and then we started to form the higher low and broke this neckline of the inverse head and shoulders. We formed one top, another top, and we tested it after this first top here, and now we are in the process of retesting it multiple times. All right, so the big question this week, and actually I shouldn't just say this week to limit it to that, because we have been going sideways for a couple weeks here. The big question for this month really is, which way are we going to go? And I don't know that. I don't know that anybody can know that. However, I will say this: as long as we remain to the top side of our neckline here, as long as we do that, I am biased to the bullish side. I think that's a fair and a reasonable conclusion to make, especially with the SEC losing two big recent battles. And we know Bitcoin halving is coming up in April. We know that ETFs look like they're going to be approved in April. A lot of tremendously bullish things. I don't think any of us know how big this actually is to have. Now, I understand there's going to be a lot more manipulation, but to have big players in this game is going to boost this price. As traders, we take advantage of the data that gives us knowledge and insight to big price jumps. All right, that's what we want to do. And that is exactly what we can see ahead for us. We have Bitcoin halving, we have ETF approval. Yes, there's lots of bearish news, there's lots of FUD out there, but we still remain on the top side of previous resistance. And what is previous resistance? Now support. And you can see it has acted as support. Once we have come above this, many times actually, there should be two circles here. We touched it once here, and now three more times over here. So 5 times it has proven as support, remaining slightly biased to the upside. All right, but again, as I said, this is my line in the sand. If we break below and confirm, what is confirmation? You guys have heard me say this many times here. All right, when we're in crypto never closes. All right, so in the stock market, I like to see a candle close below. That candle doesn't count. You need another candle to open and close below any significant level of support or resistance. In this case, we have our level drawn at anywhere from 25,200 to 25,300. I would need to see us close below that. That candle doesn't count. And in crypto, I like to see 2 more candles open and close below or above that previous level of resistance or support, whatever it is. In this case, it's acting as support. So I would want to see us open another candle on the daily below and close below that price level, and then a third or a second candle, a second full candle, a third closing below 25,200 to 25,300. And that would tell me that this red arrow is now indicative of where we're going. And at that point, guys, we probably will fill that gap on the CME futures chart at 20,290 and could go lower. If I'm back to the Bitcoin chart here, I want to draw a few levels that I see. All right, so we're going to go to our pivot points, and we can draw a level here, and we can draw a level down here at our low as well. All right, those are levels that I would target for these drops. And those would be good entry areas. You can see this level matches right with our CMA futures price. Look at this, 20,236. Forgot exactly what our the gap here on the CMA futures is 20,290. So guys, that remains a valid target. However, the big if is if we drop below that level. All right. So this level here, this top level, which we're using as support, remains of critical support. And that is what we're going to be watching for the next few weeks. Again, if we stay above that, my idea is that we remained biased bullish, biased to the upside. Right now, it's right on the fence. If we drop below this and confirm, then expect us to fill that gap at least on CME futures chart at 20,290, 20,000. Somewhere we can just say 20,000. All right. If we drop below that, there's got to be a lot of bearish news that comes out, and we probably will go down and match previous lows at around 15,000. All right. So that's my video for today, guys. Hopefully that helps you. see what I'm going to be watching for the up and coming weeks, and hopefully that helps you out with your trade. Remember, whatever Bitcoin does tends to flow over into our altcoin space. And you all know that in my recent trade exits, I watched Bitcoin pump, and as soon as it got to a level, our 200-day moving average, actually, since I'm talking about it, why don't I just show you very quickly. So here's the chart, and many of you know that I told my followers as soon as Bitcoin hits this level right here, I'm going to exit at least 50% and maybe 100%. That doesn't just go for Bitcoin, that goes for all my altcoins entries as well. As soon as we hit that level, wherever my altcoins are, I'm going to exit those positions as well, because altcoins, though they do pump sometimes. Example, Joe, we made 35% on that trade. They tend to move upward in a more lackluster way than Bitcoin. So they're a lot weaker than Bitcoin, especially with this SEC lawsuit. And so you have to be careful in a bear market going long. And I knew that as soon as we got any sort of pump, I just wanted to exit. And that is exactly what I did. As soon as we touched this 200-day moving average, I knew it would act as resistance. That it did. So I was out. At this point, what I'm actually looking for is some conviction. And the market's showing us whether it's going to confirm and remain above this neckline, or whether it's going to break below that. We should find out, I would expect this week, if not the next. But within the next few weeks here, we can't just remain sideways here in action. I don't think that's going to happen. That's least likely. So a break will occur sooner or later, and it's either going to be a drop below this neckline, in which case my previous head and shoulders pattern no longer becomes valid, or it's invalidated, the inverse head and shoulders pattern, or it remains above. And if it remains above, our target is much higher. We probably fill that gap that I showed you on CME futures at 35,000. All right, so we have to wait to see, and that's where I will be looking to re-enter into some of my trades. All right, anyways, hopefully you found the video useful, and if so, you know what to do. I don't have to repeat myself. There is my website. Feel free to follow me there if you're so inclined. Otherwise, I post all of these videos on YouTube as well. All right, until the next video, guys, peace, y'all.